A very good afternoon to you, Suresh. You've just
Mashudu.
come back from Europe. How's the mood like there right now?
Well, I think there's quite a bit of interesting developments within the European sector. I mean, we all know that growth within the European region is very, very muted. But just to paint the picture, Mashudu, there's two things happening now. Banks would probably be looking at searching for higher yields or looking at de-risking. And I think in both scenarios, I think it's pose very, very good opportunities for the banking sector in Africa. One, if European banks are looking to de-risk and focus more on their own jurisdictions, as what we've seen, for example, in the French banks. What we'll find is that I think a lot of African banks looking at a 5%, 5.5% GDP growth, African banks are looking to expand, they're looking for yield. So the one scenario is that African banks may approach European banks and saying, can I take some of your African banking assets off your books? You de-risk your portfolio and I grow in terms of the countries and the jurisdictions that I know.
You're talking about de-risking. Have any of the European banks sold off some banks? Are there examples that currently underway?
Well, RMB, for example, is starting up a bank in Nigeria, and this is one of the key things that we'll be looking to do, is to approach key players within the Nigerian banking space and looking to try and either co-fund, so working at a collaboration, or looking at hiving off a substantial amount of their asset base where we have a particular appetite. So I think, yes, there is a bit of de-risking happening by banks in Europe and other parts of the globe in terms of Africa. But then you're looking also at banks that are looking to participate and increase their focus and risk in Africa. So I'm finding that there's a blend of both.
So there's a lot of opportunity right now on the African continent. You touched on Nigeria. Looking at banks in Kenya, we're talking to the Kenyan market commentator, looking at some of the banks which have come out with rights issues. So there's lots of growth and expansion in terms of Kenyan banks. Would you be looking at Kenyan banks right now?
No, absolutely. We have a representative office in Kenya under First Rand. But one of the key things around Kenya has been their own expansion within the South Sudan market, for example, in terms of Rwanda, in terms of Burundi. And the Kenyan banks have been the first to come into South Sudan. I think one of the key things that the Kenyan banks have is a good opportunistic advantages. As they grow their asset base in South Sudan, you'll find other opportunistic players coming from either Asia, from Europe, or even from the South African banks would be coming through and trying to purchase those particular assets. So what I'm seeing is that I think there's going to be a lot of asset churn as African banks start to grow. And I think a lot of the growth over the next 36 to 48 months is going to be coming from de-risking of assets from European banks into Africa.
So now looking at European banks, some have pulled out, feeling that Africa is a bit of a risk. Where are you seeing this pull out on the African continent?
Well, we're not seeing a pull out. What we're seeing is that there's going to be a focus in specific jurisdictions. My sense is French banks will be focusing primarily in West Africa, where they're looking, where there's been a very, very strong, deeply entrenched rise from a language and a business perspective. We're seeing particular Anglophone banks, some European banks focusing on Africa, and there's going to be de-risking by a number of banks within Europe. Specifically, I can't tell you who's de-risking at the moment, but I think there's going to be a blend. What I can tell you is African banks is probably going to develop by getting these assets onto their books, growing organically by understanding the risks in Africa, and hopefully being able to drive their own growth based not only by looking at the growth in economies, but just by the decoupling of the assets from European.
What would make a banking asset attractive for you right now?
Couple of things. The first is I think everyone's in search of yield at this point in time. So I think price and appetite. And the last point has to fit in within our strategy. For example, within RMB Nigeria, we'll be keenly focused on key performing markets like oil and gas, like manufacturing. Some of where expertise we've had mining, for example, where we've had good opportunities and expertise in South Africa, we can import this to other parts of Africa.
All right. If we're looking at some of the banks, if we pinpoint banks, I don't know if you'd like to do some stock picking within Kenya as well as Nigeria. Do you have a specific stock picks right now?
No stock picks. Yeah. Because I look after most of the banks, so
yeah.
I think I wouldn't like to comment on stock picks. But what I can say is, I think if you just look at the growth that is driving Nigeria in terms of banks searching for yield and growing organically, and even looking at, I would say, the top 10 banks are very, very safe at this point, safe bets at this point in time. I think they're just looking at their financials, I think they're on the right track post AMCON. In Kenya, I think they've had a great set of results. So, and in particularly with their focus in terms of regional expansion. I think the banks are in fairly good shape for expansion over the next 24 to 36 months.
So do you see a lot of competition within the banking sector, given this shift that you are seeing, de-risking coming through from Europe? Now you have South African banks like yourselves are finding a gap and going in there. You probably will have banks from East Africa, Nigeria, also seeing opportunities. So a lot of competition to come through on this front.
That's a very good point. What you're going to be seeing possibly is as banks are starting to compete, there's going to be, one, they're going to need to be innovative. Secondly, I think there's going to be a huge competition on price. But more importantly, where certain jurisdictions are attractive, I think we're going to see a lot of foreign banks coming in and funding using their own balance sheets from abroad, which makes it a far more interesting and competitive landscape.
Well, we'll have to see and see just how all of this plays out. Thank you so much for joining us, Suresh. That was Suresh Chaytoo, Head of Banks and Development Financial Institutions at RMB.